until we get to that new system, the gold price and the silver price, I think, has to go higher because there's literally more government debt coming into the planet, and that means someone else is getting that money, and they have to invest that money somewhere. And the more this government debt expands, the more they're going to choose an inflation hedge like gold.
If we're about halfway up this major spike, which was an all-time high, and other oil is not anywhere near negative now because the economy isn't shut down. So gold is it's going pretty fast now.
I think we've got another 5 to 10 years in gold. So yeah, in the commodities bull market.
Gold's bull market isn't showing signs of exhaustion. In fact, some analysts argue it may just be entering its most critical phase. Mario Innecco believes gold has another 5 to 10 years of upside, driven by the broader commodities bull cycle. He cites the late Jim Sinclair, who insisted this run won't resemble the last one. Instead of a dramatic spike followed by decades of drift, gold is likely to remain elevated for years because the world's currencies themselves are structurally weak. Debts continue to rise, printing never stops, and fiat money is steadily losing its credibility. Clive Thompson takes the view a step further. For him, the bull market in gold won't end until the current monetary system breaks. That means as long as governments continue to pile on debt, inflation grinds higher, and crises, financial or geopolitical, continue to erupt, gold and silver will continue to climb. The real turning point, he argues, will be a reset, perhaps a gold-backed currency, possibly a restructured dollar, or maybe the rollout of central bank digital currencies that come with limits on legacy money. Rafi Farber adds another dimension by examining ratios. Since 2000, gold has outperformed most commodities, though not in a straight line. Pullbacks have been sharp, but each bottom has set the stage for another leg higher. After bottoming out in 2022, gold is rising again, while other commodities continue to lag. He sees echoes of the 1970s, when leadership rotated across energy, metals, and agriculture, but gold held its own. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
I think we've got another 5 to 10 years in gold. So yeah, in the commodities bull market. Why do I say that? Well, I listened to Bert Doman. He's a fund manager, and I think he started out in the 70s. He's originally from Germany, but he's US based. And he said that in the 70s, he got his clients into gold in the mid-late 70s, and they did very well. And then in 1980, he told them, you need to get out of gold. We're going to have a 20-year bear market. And everyone thought he was crazy, but he was right. And then he said, but after that, there will be a 32-year bull market. And I think he looked at the price of gold going back a few hundred years in the UK, because the UK and the US are linked, the prices. So if you add 32 to 2000, you get 2032, and that's why I'm looking for another 5 years at least. But I think Jim Sinclair used to say that the next move higher in gold, let's say, it's not going to be like in 1980, because we went up to like almost 900, and then the next 20 years we drifted between 250 and 400. He thinks it's going to stay up there next time. It's going to be different. So I'll let Clive answer that.
Well, I think the bull market, if you like, if we could call it bull market in precious metals, continues until such time as the currency has to be replaced by sound money. So how long does it continue? I think at best, the currency we have up today is going to last another decade. And I mean, at best, I really don't think it's going to last that long at all. So whilst we're still in the currency system we're in, I believe we're going to see the gold price, the silver price pushing higher and higher and higher. And then at some point, there's going to be a crisis, a monetary crisis, an interest rate crisis, a bond crisis, a currency crisis. We don't know what it will be, or it'll be some external crisis, whether it be war or civil war or some event that we're not expecting, some black swan event. But these things come along and they'll be pushed into a situation where people are running to the shops to get anything which will preserve its value. And at that point, we'll start with a new currency of some description or restrictions of what you can do with your old currency. And at that point, we go back into a new system with a new dollar or a new pound or a gold-backed currency. We don't know exactly how it's going to look. It might be the central bank digital currency where you've got restrictions on how much of your old currency you can put into the CBDC. Whatever it is, until we get to that new system, the gold price and the silver price, I think, has to go higher because there's literally more government debt coming into the planet, and that means someone else is getting that money, and they have to invest that money somewhere. And the more this government debt expands, the more they're going to choose an inflation hedge like gold.
Yeah, Rafi, how long more do you think we have in the gold bull market and commodities?
Um, I'm I don't think we're in okay, so we're in a gold bull market in commodities. So this is the gold to CRB ratio. Right. So it goes back all the way to 2000, but I picked 2010 here just so you could see.
Yeah,
This is if we're in a gold bull market, then this is the value of gold in terms of other commodities. The higher it is, the higher the gold value is relative to other commodities. So and we've been in a bull market since 2000, but there've been major pullbacks. Right. This is 2022 when gold and silver bottomed. I think silver bottomed at like $16 or something like that, maybe a little bit more. And we've been climbing ever since then. This was the lockdowns when oil went to negative 35, so that's why it went so high
yeah,
here. But like we're about halfway up this spike when the lockdowns happened when oil went to negative. So if we're about halfway up this major spike, which was an all-time high, and other oil is not anywhere near negative now because the economy isn't shut down. So gold is it's going pretty fast now
yeah.
relative
And
to
I
everything
think
else.
also the question, I guess, I think commodities, yeah, they're lagging gold, of course, but I think in terms of fiat, yeah, they moved up quite a bit from March 2020. They had that huge drop, like with oil, and then they went up, and they've been consolidating. But I also expect commodities to do well. But they also, I think, Rafi lagged gold and silver in the 70s. So even though there will be good places in commodities, and they take turns, don't they? They go up at different times.
The question hanging over the gold market is whether its next significant revaluation will come by government decree or through the free market, forcing the issue. Mario Innecco and Rafi Farber point back to 1933, when the U.S. raised the official gold price from $20.67 to $35. That 66% jump triggered a dramatic economic shift. Within 2 years, inflation swung from deep deflation to double-digit positives. Now imagine something similar today. With the official U.S. gold price still set at $42, a move to even $4,200 would represent a hundredfold revaluation. The impact would be explosive. Confidence in the dollar could crumble, banks could topple under the stress, and the market would almost certainly push gold even higher, potentially into six figures as investors scrambled for safety. Clive Thompson highlights a more subtle angle. Hidden in the U.S. Bitcoin Act is a clause that touches on gold. It would allow the reissue of gold certificates at market prices, forcing the Federal Reserve to pay the Treasury the difference between the outdated $42 peg and the actual trading price. The result? A massive windfall for the government without issuing new debt. Officially, the money would go toward covering the costs of a strategic Bitcoin reserve, even though Washington insists it won't buy more beyond what it has already seized. Let's get back to the interview.
Yeah, so I looked at that article and it was talking about very minor cases of a fraction of gold reserves being revalued relative to some special bond issuance somewhere, but it wasn't like a major revaluation like in 1933, straight up from 21 to 35 on everything. Well, they were very minor revaluations, but we saw what I don't think a statutory revaluation is going to happen. It's possible. I wouldn't be against it because that would just bring on the end game completely. But I think what we're talking about is a market revaluation, which is when gold keeps going higher and higher and higher by market forces. That is a revaluation. It's the same thing. If it does happen, if it happens statutorily, then we can look, forgetting about all the little minor cases that are quoted in this Fed paper on the New York Fed's website by some, recent grad student. I think he just graduated grad school or something. The young looking guy, maybe late 20s. But forget about all the cases that he cites. Just look at what happened in 1933 to the price of everything. If you take the price inflation statistics, the CPI statistics following the April 1933 gold revaluation, within 2 or 3 years, the price inflation statistics went from like -6 to like positive double digits. So that was only a 66% revaluation. Now we're talking about a revaluation from 42 to 40 to, let's say, by the time you do it, it'll be 4,200, like 100 times revaluation. It's going to be,
Yeah.
compare 100 times to 2/3. I mean,
I
it's not
think
even
you
comparable.
I think you mentioned it because we did speak about this early this year. Now I remember. You said that right now the market price of gold is uh, there's a relationship between the market price and the 42.22.
Yeah.
So even if you revalued it to $100, that would be massively bullish because the price is going to be based on something that's like almost, 2.5 times more valuable than the previous price. So, like you said, I think a few months ago, that if you revalue it to 3,500, gold is gonna, it's the end game. Gold is gonna go to like 100,000, and it's gonna be the end of the dollar and everything else.
Yep. Yeah, it's going to be. I don't know if it's not going to be overnight, but it would be, I think, within months, you'd see gold start really to skyrocket in a scary way, and the banks would collapse.
On the question of gold revaluation, there was, and still is, if you like, a very interesting clause in the thing called the Bitcoin Act from Cynthia Loomis in the United States. And I'd just like to read the relevant clause about gold.
Is that the Genius Act as well now? Is that the one that passed? I think it is, isn't it?
I think that
I
has to do with
haven't seen that
stable
one.
coins.
This
Yeah.
is about gold. This is about gold. It's in what's called the Bitcoin Act, which is not law. It's stuck in the banking committee or somewhere
Okay.
like that. But I'll read this to you. This is one of the clauses of the Bitcoin Act. Not later than 180 days after the enactment of this act, the Federal Reserve banks shall tender all outstanding gold certificates in their custody to the Secretary of the Treasury. Not later than 90 days after the tender of the last certificate, the Treasury, the Secretary of the Treasury, shall issue new gold certificates to the Federal Reserve that reflect the fair market value price of gold held against such certificates by the Treasury as of that date. And then, upon issue by the Secretary, each Federal Reserve Bank that receives a new gold certificate shall remit the difference in cash value between the old and the new gold certificates to the Secretary for deposit in the general fund within 90 days. Putting that into English, they're basically planning, if this bill was to ever pass, in that bill, to basically revalue gold at the market price, and then the Federal Reserve would have to pay the difference in money terms to the government, and it would basically be free money for the government with no increase in the government debt whatsoever. The government would still keep its gold. It would be issuing in exchange this gold certificate, which has no maturity date. It's not redeemable and it's not convertible to gold. So basically, they get a lot of money for nothing.
Is that because they're going to use that money to buy Bitcoin? Because recently, Besson said that they don't plan to buy any Bitcoin. They're just holding on to the Bitcoin that the government has confiscated from like criminals and stuff.
Yes, indeed. That comes under the clause. The heading of the clause is offsetting the cost of the strategic Bitcoin reserve. So
Yeah.
yes, it's going to be a source of funds for that particular
Well, in 1972, they revalued from 35 to 38. And then in 73, from 38 to 42.22. And by that time, the price of gold was like almost 100, and it just kept going. So, yes, if they were to revalue and they had a new statutory price, I think that would be like a put in the market, and gold would never again go below that price. FC Kavija, thank you for your super chat. Uh, this is a question that Clive might know a bit more. I don't know if Rafi follows, what's his name? The guy who,
Michael Saylor.
yeah, MicroStrategy. At what
And
price does MicroStrategy have to liquidate? I think they're already the share price is dropping quite a bit, and I think Michael Saylor. During the dot-com bubble, he lost $6 billion in one day. So let Clive answer first and then Rafi.
There've been a lot of articles suggesting that if the Bitcoin price was to go down below a certain trigger level, then MicroStrategy would be bankrupt. And I've seen quite a few different numbers mentioned and often repeated, but nobody that I've seen has ever done any work to work it out. So I took the initiative to get one of the artificial intelligence engines to work it out for me. They came up, they came up with a completely different number than everybody else. I'm not going to say that number because I don't know that that number's right either. I haven't done the work. But let me just say that the number they came up with, and by the way, they suggested that the workings by other people who published a number were wrong because there's many special conditions which apply to the bonds which have been issued by MicroStrategy. But long and short of it was the level at which there'd be a problem is not where people are thinking that there's a problem. It's actually, according to AI, and not me, according to AI, it's somewhat lower. I'd love to work on it, but it sounds like a really big job to do manually.
Rafi, any
um,
opinion on Michael Saylor and
well, my thoughts on Michael Saylor is that if he succeeds and makes people's lives better in a long-term way, then there is no justice in this world and everything is insane.
yeah,
Um, I, it's not going to happen. There are people that are just addicted to this sort of sensationalist insanity, and Michael Saylor is one of those people. They just
yeah,
go into bubbles and they pump them up and they get really excited about them and they make other people really excited about them and they sound stupider every time, but every time people fall for it, no matter what. I mean, in the dot-com, at least there were companies. In Bitcoin, they're not even talking about a thing.
yeah.
Like I don't even. There's not much more I can say about this.
What stands out in all these perspectives is that gold is no longer being treated as a side asset or a mere hedge. It is increasingly seen as a direct reflection of how fragile the financial order has become. Debt levels have gone parabolic, currencies are deteriorating in credibility, and policymakers continue to stretch the system with experimental fixes. This isn't just about price action on a chart, it's about the foundations of trust in money itself. If official channels decide to recalibrate gold's role, the outcome would ripple far beyond markets, altering the way savings, trade, and even geopolitics function. And if the adjustment comes not by design but by market pressure, the shift could be faster, more disruptive, and harder to control. What this really signals is that the world may be entering a period where gold is not just an investment but a central anchor in the next monetary chapter. Could the coming years mark the moment when gold transitions from being a safeguard for investors to the very backbone of a redesigned financial framework? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.